All right, it is Friday, and as you know, we always do a Friday financial news wrap up with my good friend, Mr. Michael Zuber. How are you, Michael?
I'm doing great, Ty. Thank you for the opportunity. I look forward to this discussion every week. So thank you for the opportunity.
I'm super excited. I got to say, man, I just got the book. It just came in
Woohoo!
the mail, so I am super pumped. We'll talk about the book a little bit later. We're going to do something special too. So watch all the way to the end of the show. We're going to do an announcement about something special we're going to do.
Nice.
So watch the entire show. Let's get right into it though. Financial news. Talk about what happened with GDP this week.
Yeah. So again, this has been a very interesting week to watch day by day and to try to summarize here. So on Thursday, we got a report for Q3 GDP, right? GDP, gross domestic product. Basically, is our economy growing or shrinking? And the expectations going into this were for a pretty slow growth. I think it was like 2.8% coming off of what was 6%, right? So slowing down. And we came even lower. We came in at a flat 2%. Now, there are lots of things you could talk about, lots of this and that, and ports and all of that. But regardless of the noise, it was a weak quarter. And it was particularly weak because when you add in what we're going to talk about next, inflation was 5.3%.
Wow.
So a lot of that 2% growth was simply consumers paying more for gas or for groceries or this or that. So, Q3 was not a good quarter. The consumer retreated. And again, you could blame lots of things, Delta, this, that, the other thing. But yeah, Q3, no matter how you cut it, was a disappointing quarter.
Interesting. Very interesting. Well, we've been talking about this all year. So it's great to be connected to you and to see as things develop and then also be able to look down the road. So let's talk about inflation. We've been talking about it all year.
Yeah.
What's going on this week in inflation?
Yeah. So inflation, right? The Fed's favorite measure is something they call PCE, personal consumption expenditure. Most people think it's CPI, consumer price index, and there's PPI, producer price index. All of these measures, bad, all high, ranging from, I think, a low of 5.6 to a high of 8.1, depending on which metric you're looking at, all bad. I am pretty concerned because one of the largest indicators is not yet in the numbers, and that is rent, right? I posted on my Instagram feed last night a report I got from another source about average rent across the country is up 8.1%. I've seen other reports talk about 12%. So let's just call it between 8 and 12 rent or rent equivalent. And right now, PCE, CPI, these other metrics are picking up 2% rent growth. So I asked the audience out there, has your rent or rent equivalent only gone up 2%? And there's not a person out there that says yes. It's much, much higher. So I know how these numbers go. They're rolling the historical. It sometimes takes months for real data to get in there. So we are going to see a pop when rent is eventually in the number. So that's why I've been so confident that inflation's going to be higher, it's going to stay longer, and it's not transitory. And the good news is you can go back and watch our financial write-ups for months now, and I'm on a pretty good streak of calling the future. So yeah, inflation's a problem, and it's not going to get any better.
Inflation is real. It is a problem, and it's not going away soon.
Not soon, no.
Yeah, we've been talking about it all year. So let's continue the conversation. Something that households are talking about, friends. Do we need to stock up on toilet paper, and paper towels and that? What's going on with supply chain? What are you hearing, and what's your thoughts on?
Yeah, so we definitely have the supply chain is definitely a problem, right? So historically speaking, the ports of Southern California, LA and Long Beach, before this event, the record number of ships kind of waiting to cycle through was 19. Last I checked, and I think I read this on Tuesday or Wednesday, there's 103 out there.
Wow.
That's more than 19. And then you talk about all the containers and then truckers. I don't know about you, but we have ordered stuff. Like we ordered a new piece of furniture like 2 months ago, and it has been delayed 3 different times. The thing is made. It is done. It's just sitting on some container on some ship somewhere. And yeah, it's a problem. And perhaps that's one of the reasons why Q3 GDP was so low, because again, you have 100, ships out there and they have, I don't know how many containers per ship, but that's a lot of goods not in the system. So that could explain some of it. But yeah, the supply chain's a problem. It's not going to work out quickly, because what we're seeing is producers are producing, consumers are consuming, but the whole middle of the work in process, the shipping, it's I honestly suspect the only way it gets fixed, and this is crazy to say, but I'll say it anyway. I think they're going to have to bring in the National Guard or the military to help just speed up trucks and driving shipments around. I don't think they have enough capacity and enough drivers and enough cranes and enough skilled resources to unmess this up. I believe it will eventually be called a national disaster. And I don't know who does it. I'm guessing the president says, you know what? The National Guard for the next 5 months, they're just going to run trucks. I think it's going to get that bad.
Wow. Okay. That's a different perspective. I thought it was a lot more hype, but it definitely feels very real as you're describing it. And you think about even like that whole oil spill that happened in Southern California, they believe is directly related to.
Yeah, a ship with an anchor just dragging an anchor and clip the line. There's just so many ships out there.
Interesting. Well, speaking of polluters, China.
Nice transition.
Do you like that?
I was like, where's he going with this?
So let's talk about China.
Yeah.
Something you've been talking about. I'm seeing a lot of headlines about Evergrande, about real estate developers in China, $300 billion. Mm-hmm. What kind of recap and talk a little bit about what's going on there and what you're seeing?
Yeah. So right now, a lot of folks are focused on Evergrande. It's the biggest thing, second biggest, 305 billion. So far, they've actually made their payments. They use the grace period, right? You don't pay, you got 30 days of grace. So they've been paying up. Evergrande is not the story here, folks. Property developers in the real estate market in China is the story and needs to be talked about more. The fact is that a lot of Chinese have purchased their property, owned it free and clear. It's where they store wealth. And unfortunately, they don't produce rent. They're not landlords. They're not one rental at a time, right? If you own 2 properties, for example, you're middle of the road in China, you own the one you live in, then you have another one in some other building. You probably have never even furnished. It's just, that's my retirement, right? That's what they've thought it was. Well, now property developers are over leveraged. They can't sell. For example, Evergrande, their sales for the last month were down 93%. If you know anything about a property developer, they live on cash flow, right? And when the cash flow stops, meaning they're not selling, their enterprise blows up.
Yep.
That's a problem. So property developer is going to go kaput. But what's really happening is the consumer who had faith, who over the last decade have proven that the fastest way to wealth is to buy a Chinese apartment. That is now blowing up. They're going to see property values decline, probably by double digits, probably very quickly. And the Chinese citizens are going to retreat. It could make our Great Recession, our property decline look small. It is that big of a problem. And again, just yesterday, Starbucks, the coffee company, reported, and they missed, but they reported that their biggest down revenue was China.
Interesting.
So some people are trying to spin it as, hey, the virus lockdowns and blah, blah, blah. Maybe. I suspect it's human behavior. The Chinese consumer, the individual in China, is nervous. They are nervous about their wealth. I ask you one simple question. If you woke up one day and you were worth half as much as you were worth yesterday, would you stop spending money? The answer is yes. Most people would. And that's what I think is going on in China. And that is going to if Evergrande is not going to be the problem that causes world disruption, the fact that 1 billion people or 1.3 billion or 1.5 billion, whatever the number is, Chinese citizens stop spending, that is going to be a problem. China's going to be in for a recession. They're going to have a negative GDP print, which is unheard of. Right now, people are calling for a slow growth of 6%. I'm telling you, it could very likely be negative. They all have a technical recession, which is 2 negative quarters in a row. That is going to disrupt the world economy if China shrinks. And they're shooting themselves on the foot, seemingly on purpose. But yeah, I'm concerned, and I feel for them, right? They thought they were doing the right thing owning real estate. Unfortunately, they're not landlords, right? They're just holding a empty building, which is a mistake. I think they should rent them out, get cash flow, so they can, use that. So we'll see what happens.
So just to compare, and I want to relate this to our viewer, that what you just described sounds very much like what happened in 2007, 2008. Basically, our Great Recession, where real estate just fell into the toilet. And all of a sudden, that part of the economy was devastated. And it took from, let's call it 2008 to 2012, probably to climb out. And that's basically what you're describing. It sounds like where China's at right now. Is that pretty accurate?
They are on the downslope, and I think it's going to be much faster than anybody expects. To me, it's going to be like, 08, right? It's broke. And now the question is, how fast do we get to the bottom? I feel for the people. It's going to hurt. People are human beings. It doesn't matter what language you speak. When you are suddenly worth less, and in this case, 50% wouldn't be unheard of, you're going to act different. Where you used to go out and buy Gucci belts and Prada handbags or whatever it is, you're not even buying a $6 latte. That should tell you something. The fact that Starbucks missed in China should tell people are conserving cash in China. That people need to wake up, because right now people are missing it, in my opinion.
Got it. So let's continue down the road. So you talked about earning disappointment. Starbucks was one of the big ones.
Yeah.
Were there other big companies?
Yeah, Amazon and Apple. We kind of had to triple whammy. Amazon and Apple missed yesterday. Apple everybody should have expected. Apple, they produce stuff, and those things use chips. And what have we been talking about for a year? Chip shortage. So Tim Cook, CEO of Apple, I believe, said they were $6 billion short of revenue because they didn't have enough finished product. So again, Apple still made $1 gazillion. They're still really healthy, but they missed. And they're saying they might miss in Q4. They're lowering Q4 expectations. Because again, you can't, an iPhone, which I have and proudly have, you don't have all the chips, you can't sell it, right? It's kind of a paperweight if it doesn't work. So yeah, that was a miss. And then Amazon was interesting. Amazon was interesting because really what they're telling you is the consumer might not be as robust as we thought. Because again, what does Amazon do, right? They have the cloud and all these other things, but a lot of it is they're shipping these cardboard boxes around the world, right? So maybe the consumer's not as strong as we thought. And oh, by the way, Amazon highlighted that they have, they're spending more, right? Because again, they're trying to keep their customers happy. So instead of shipping it by ground, they're flying more stuff, and that's just more expensive. So I think Amazon ate a lot of expense that I expect them to raise prices in the future, right? Like Amazon's like, ooh, that hurt. Well, we're going to have to raise prices. This is the same thing Tesla did. Tesla told us one of the reasons they were able to deliver all their cars is they stopped shipping it by boat and they're shipping stuff by plane. That's expensive. So what did they do? They raised the price of their vehicles between $2,500 and $5,000. Inflation is real. Inflation is very sticky. It's coming, and people need to be prepared for it.
Yes. Wow. Well, we've been talking about it all year, so it is becoming very real. I want to close with this thought, and then we're going to also go back to the promotion of the giveaway or the free event that we're going to do, the virtual event. So I want to close though and just describe, let's talk about, for our viewers out there, a lot of talk about recession, a lot of talk about the US economy due for a recession, right? What is a recession, number one? And then number two, following up behind that, what do you think, how do you think it plays out with regard to us sitting here as a real estate investor, a one rental at a time investor? what is a recession and how do you see it playing out for us?
Yeah. So the technical definition of a recession is 2 consecutive quarters of negative GDP. Now, again, remember, we're not talking nominal, right? So Q3 report of 2%, that doesn't count because it was 2% positive, even though I think it's negative 3.3. They use the nominal number, so 2%. You have 2 negative numbers. That's the technical definition of a recession. And recessions are always called in hindsight, right? Because you only can call it once you've had 2 quarters in a row of negative GDP. Now, what is it going to feel like? So again, folks, the business cycle is real. We will undoubtedly have another recession. We will undoubtedly have several more recessions in my lifetime. Hopefully I live a long time. They happen. It's, you grow and then you shrink, and you grow and then you shrink. What's going to happen for us is, I think we've learned, don't bet against the Fed. The Fed continually comes out and, was a bazooka, and then it's then it's 5 bazookas, and it's 10 bazookas. They will slash rates. They will buy ETFs. They will buy bonds. You can count on the Fed coming in. That said, I think the next recession is going to be interesting because it will likely be one that hurts unemployment. Unemployment really goes up. And the whole definition or the joke or the saying, what's the difference between a recession and a depression? A recession is when your neighbor's unemployed. A depression is when you're unemployed, right? That's kind of the humor in it. Yeah. So what I think the next recession will be is there will be a lot of people that bought housing in the last couple of years. And I think we're in for a housing slowdown, not a crash, right? So there's not going to be this huge equity gain. So there'll be a lot of people sitting on 5, 8, 10% equity that when you try to sell in an emergency, you just don't have the equity, right? Because you don't want to write a check. So I think what's going to happen in the next recession, whenever that is, next year, the year after that, is creative financing is going to come back in vogue, whether it's subject to or other things. I think that's going to be the next recession, because a lot of new buyers, a lot of people impacted. You got to move, you got to change states, change careers. So that's something I'm looking to learn more of, right? Pace Morby does a lot of that. You do a lot of that. So that's going to be something I add to my bag. The last real deep recession we had just took values down. So that the answer there was go get hard money, go get private money. It's a different ballgame. I think the next one's a recession into a flat market, a flat real estate market. So creative financing is going to be the #1 topic, I think.
Interesting. Very interesting. And then let me just follow up on that. What are your thoughts about rent in a recession when we do see this recession? I mean, rents
are sticky. One of the things that I've seen in all the recessions is people lose houses, but they want to live in a house. All their stuff doesn't fit in an apartment. So I've never seen rents go down in my 20 years, but they do go up. And in the Great Recession, rents went up pretty big. Yeah.
And I would agree with that. And it's interesting, even in the 90s, when I started, there was a recession with all the military bases closing in the Bay Area. And I saw rents soften. I mean, it was very minor, maybe 25, 40, 30, 40, 50 bucks, maybe on $700, $800 a month. So very, very slight, but pretty tiny. The other thing too, is I think about the rents, especially for California, is we're in statewide rent control. Mm-hmm. And then we even also have local layers of rent control. And so because of the rent control, we're seeing a lot of rental units leaving, right? Rental units converting over and never coming back as a rental.
Nope, they won't come back. They'll be owner occupied. The supply of affordable rentals has never been lower, and it's only going lower. And that's why rents will be, worst case flat.
Worst case flat. Well, there you go, folks. We did a lot today. We definitely went hard today. I just want to encourage everybody, please follow Michael at One Rental at a Time. I've got to say, I just got the new book and
look at you.
So here we go, One Rental at a Time, and then the new book, right? So one of the things we're going to do, I teased in the beginning, we are going to do a virtual meetup with Michael. We have not announced a date or time, but it will be in the next week or so. And we're going to talk about forecasts, what to expect going into the new year, right? It's November, right? It's the end of October today when we're recording this. But here in November, we should start thinking about business plans, setting intentions, setting goals for the new year. And so who better than to be with than Mr. Michael Zuber, right? So we're going to talk about forecasts, but we're also going to talk about the book. We're also going to do a live, just Q&A and a lot of interaction. It'll be an open mic. So we are going to announce that if you're interested in attending the virtual meetup, we're going to do that again here in about the next, I would say 7 to 10 days. So if you're watching this, please DM Michael, DM myself, send me an email, send us a Facebook Messenger. Make sure to reach out to us. Let us know, get us your email address so that we can go ahead and make sure that you get an invite. Is that fair, Michael?
Awesome. I look forward to it. Thanks, man.
I put Michael on the spot. I told him, hey, by the way, we're going to do this free event and I need you to be a part of it. So thank you so much, Michael, for all that you do, all that you share. Thank you for all your insights.
You got it, bud. Take care.
Have a great day.